Looking at future growth opportunities, artificial intelligence has become a major driver of market sentiment. The Magnificent Seven now accounts for about 40% of S&P 500, and investments in AI keeps rising this year. How much of this do you think has translated into real productivity gains so far? And to what extent do you think AI is already in a bubble territory?
Okay, so I think the question about whether it's going to produce a productivity surge is an open question, right? I mean, everybody, people have views about that. I'm conditional on this diffusing across the entire economy, and even internationally. I'm sort of cautiously optimistic about that. Other people are much more skeptical and think we'll just get a round of, sort of automation and unemployment, and we'll kind of miss the opportunity in the kind of machine-human collaboration sphere. And I don't think there's any way to settle that in advance and make confident predictions about it at all. So on that front, I think now, if you sort of ask yourself, I mean, this question about people use different terms. Sometimes you hear the term hype. Okay, hype is, I think, a term that we probably shouldn't use, because hype has the connotation of overselling the potential. In this case, overselling the potential benefits economically. And I don't think people are overselling it. They just maybe have different estimates, and some people may be overestimating the potential, right? We'll have to wait and see. But if you look at both the incentive structures in America and China, where the major investments are being made, but especially in the United States, the incentive structure, I mean, if you think the major players in this are largely tech giants or new arrivals with very large amounts of funding, right? So if you ask yourself the question, if you're one of those tech giants, what are the costs of falling behind and coming in third relative to the cost of over-investing a bit now? They're just, the costs of coming in third are astronomical compared to, and losing, right, in this thing as they see it, right? So naturally, they have an incentive to make sure they're not under-investing relative to their rivals. So I think, the investment boom is probably being driven beyond the point where you could really defend them in terms of being at exactly the right point with respect to the rate of return on investment. And I wouldn't be surprised if some of these investments turned out to have lower returns than people expect. This is the incentive structure of an arms race. I don't want to call this an arms race, but it's the same incentive structure. You have similar things going on in China. And then when you take it up a level to the strategic competition between the United States and China, because of the central importance of these technologies in kind of economic performance, but also national security and defense, you have the same incentive structure. Neither country wants to be way behind, right? And so they're not going to do anything to kind of run that risk. And in the American context, they're not going to do anything to stop these people from making these investments, right? Because that's the American version of how we're going about this. So yeah, I think you could probably have an investment boom that you could argue, based on the incentive structure, is a bit over the top. There's one other dimension that people just talk about as if they're all the same thing, and they're not, which is what's going on in the markets? Are these valuations reasonable?
Yeah, right.
Or are they in bubble territory, independent of whether these guys are over investing or not, right? Just for the moment. And the answer to that's probably yes, I would guess. I don't know how much. Some people think we're going to have a great crash. We could certainly have resets downward, and recent activity looks mainly like kind of volatility, and nobody's really made up their mind yet. But there's two things drive that, at least. One of them is what's sometimes called fear of missing out. While this is going on, if you're managing other people's assets, if you decide it's not a good idea and stay out, and it goes on for 3 years and everybody else has spectacular returns, you're in trouble. So on the basis of relative performance. So the incentives, to stick with it, until there's evidence that there's something really wrong, are pretty strong for people who manage other people's money. And then in Silicon Valley, there's a belief which I think is largely accurate, which is whenever you get one of these very big technological developments like the ones we have now, there's a tendency to overestimate their impact in the short run, and then underestimate it in the long run.
Just like the
So we're in
bubble
the
internet.
yeah, the internet had elements of that in it. So people, the internet, we was obviously a bubble. Then many people decided it was all nonsense, which was also not true, right? The major tech companies emerged from that, the Googles and the Amazons, et cetera. So you have sort of both things going on at the same time. So yeah, are we running into the overinvestment territory on real investment? Yeah, probably a little, maybe a lot, but I think it really depends on whether this leads to, a major set of opportunities with respect to their customers. And they'll be interested in it if these technologies, if they either increase their efficiency, reduce costs, or probably even more important, give them whole new sets of products and services they can deliver to people. And that's the open question.
Yeah, because people always tell me that internet bubble is a bubble, but internet did change everybody's life. So
No, yeah. Internet definitely changed everybody's life. And there was a lot of infrastructure that had to be built and a lot of learning that had to occur. It's exactly the same thing. This is not the internet bubble in one sense that these companies have at least real revenue, right? Some of them aren't profitable. Some of them are really quite profitable and are financing this from that, the Googles and Microsofts of the world. Whereas in the internet, there were lots of companies that people thought up that seemed to be interesting, and they never had revenues or profits or anything else. They were just kind of flashes in the pan. Yeah, literally a bubble. That's not the case now. There's this. Whether you're overestimating the potential of these technologies, nobody thinks there's nothing there. Right.
China has also been investing heavily in technology and AI, and is emphasizing innovation and new quality productive forces as drivers of economic growth. From a global perspective, how do you see China's progress in AI, green energy, and smart manufacturing contributing to productivity and potential output in 2026?
Well, I don't know about 2026. I mean, because I don't know how fast this stuff is going to come, but the potential is enormous. So the serious studies of the progress in China all indicate that whatever gap there was between China and the United States seems to be closing. China's been a major force in the AI area in expanding the open models, which are more accessible to people all over the world, including the Chinese enterprises. China's clearly, I think, in the lead both technologically in terms of cost and the green technologies, or a subset of them, like batteries, electric vehicles, solar. It's a powerhouse in biomedical life sciences, which is not normally the one that people talk about, but it's a pretty important dimension of scientific progress, and including scientific progress that intersects with this artificial intelligence. If you think of, AlphaFold, the protein folding prediction thing that came out of DeepMind, that's being used by biologists all over the world, including in China. It's completely open source, right? So in all those dimensions, I mean, China is 31% of global manufacturing. China is deploying robots. Robots are really interesting because they were highly constrained before, because basically, they had to operate in simple environments, structurally simple environments. They either worked, when they were pre-programmed, or they didn't work at all. Now you can talk to them, etc. I expect China to be a powerhouse in robotics. China is deploying more industrial robots than the rest of the world combined, according to the data that I've seen. So in multiple dimensions, I think China is very surely not falling behind, and is likely in many of these areas to be either a major force or the major force.
At the beginning of our conversation, you mentioned that ASEAN might be one of the outperformers among emerging economies. As China deepens its economic ties with ASEAN, as well as with the Middle East and Africa, what new dynamics do you expect to shape these relationships over the next year?
Well, I think the relationships with the ASEAN countries will continue to be strong and be deepened because it's in everybody's interest. The center of gravity of the global economy is shifting to Asia, and so you got centers of financial excellence in the Hong Kong SAR and in Singapore. So although on that front, I think that the major change in the last 2 or 3 years, I think, has been the arrival of the Middle East, not just as an energy source, but potentially more stable and as a potentially large investor in science and technology, especially digital technology. So in Abu Dhabi, there's a university devoted entirely to artificial intelligence and its applications in not just the economic ones, scientific and others. There are, major investments in the UAE and in Saudi Arabia in these technologies. So I don't know how that's going to all play out, but I mean, this is a completely different picture than the one we had several years ago. Money is flowing in. They are investing out, and that money's coming back to help them diversify their economies and update them, make them modern, technologically driven economies. I expect on that front, actually, that the ASEAN countries, China, and others will have a relationship with them that's productive, and I think the West will too.